All right, let us continue our lesson. The next kind of insurance is fire insurance. This is covered by Section 169 to 175. Okay, and fire insurance is defined in 169 as a contract. Okay? Again, like any other kind of insurance, this is a contract, and specifically, this is a contract of indemnity, and in this contract, the insurer, because it is being paid the premium, agrees to indemnify another against loss or damage to a property caused by a hostile fire. Okay, so specifically, hostile fire was mentioned in this particular section. Okay, later we will discuss the kinds of fire as friendly fire and hostile fire. But before we do that, section 169 also talks about the coverage of insurance, fire insurance. Specifically, of course, it covers damage or loss due to fire. Okay, and it may also cover risk that are allied, like lightning, windstorm, tornado, earthquake, and other allied risks, but only when the policy would state that these are covered by the policy. Okay, so this is what we call extension. Okay, so if we are given a problem and the problem states that the policy states that only fire is covered, okay, and the loss was due to any of this lightning, tornado, earthquake, and other allied risks, so they are not the compensable. Okay, so you need to be very specific when these are covered. Okay. Um, Also in fire insurance, the main peril, of course, okay, the main peril should be fire. Right now, this ECE or extended coverage endorsement. Okay, so this is actually a package. There are insurances wherein nakapackage na yung mga yung other perils with fire, like explosion, um, also aircraft, okay, vehicles, and even damage due to smoke. Okay, but again, this must be explicitly written in the policy. Yeah. Now, ECE may also cover specific risk like riot and strikes. Okay, so this is when this policy would cover damages in case of damage due to riot or strike. Also, bursting or overflow of water tank. I think these are self-explanatory. Okay. Now we go now to the discussion on hostile fire versus friendly fire. Again, the loss is compensable only when the fire is a hostile one. Okay, and when is a fire hostile, it is when the fire is out of control, okay, or beyond the limits, because there are fire that are deliberate, and as long as they are confined within the area, then they are friendly fire. No, to give an example, of course, we all cook use using fire. Okay, and supposing that unintentional damage occur while the fire is still in the confined area, then that will not be compensable unless when from friendly fire naging out of control na. Okay, so this is when yung mga usual na eksena sa movies or TV show na umabot sa cortina and that caused fire, then that becomes a hostile fire, and that loss will be covered and should be compensated by the insurance company. Okay, so these are the requisites. Okay, requisites in order for the loss to be compensable or damage to be compensable by the insurance. The proximate cause of the loss should be fire. Of course, again, you need to relate it to yung mga ECE which we discussed earlier, and also allied risk if they are mentioned in the policy. The fire must be hostile. The fire must be accidental in origin, and the flame or ignition must be of sustaining velocity. Okay. Now, relative to this, we have here a discussion on. So I think let's discuss for a while proximate cause. Okay, so this is a concept that we encounter when we are studying uh, other laws like criminal law. Okay, so the proximate cause is a cause which in natural and continuous sequence, right, and it must be unbroken. Okay, it produces the injury. Okay, so let's say, for example, in a neighborhood, okay, so in neighborhood, so there are several houses, okay, and let's say fire, there's fire here, okay, and because of this fire on this house, damage, the entire neighborhood is damaged, okay, and therefore the fire is the proximate cause of the loss. In relation, okay, Section 86 is important, okay. Of course, Section 86 is not confined to fire insurance. Okay, so it applies to all types of insurances. But under Section 86, it says that the insurer is liable for a loss when the cause of the loss is the peril insured. Okay, such that when the insurance is on fire, and let's say, for example, the damage was caused by, let's say, flood, then therefore this loss is not compensable because uh, flood is the proximate cause of the loss and not fire. Okay. Now, in Section 86 also, and I think as a general rule, it is the insured that has the burden of proof. Okay? It is incumbent upon the insured to prove that the risk or the loss was due to the peril that was insured against. Okay, such that when the insurance is fire, okay, or fire insurance, it is the duty of the insured to prove that the loss was due to fire. Okay. Now, what will happen in case, for example, there's this house and this house was insured against fire, and then let's say, for example, there is a wall here, okay, and let's say, for example, the fire was here, okay, so fire was here, and because of the fire, it weakened the foundation of this wall, causing this wall to collapse. And because of the collapse of the wall, uh, the house was damaged. Okay, so in this particular case, the cause of the loss is actually not fire. Is the loss compensable, or should the insurance company pay for this loss? Answer: yes. Okay, why? Because while the cause of the loss is due to the collapse of the wall, okay? But the proximate cause of the loss is still the fire, okay? Because without the fire, it will not cause the collapse of the wall, okay? So this is a simple illustration such that in case this is as in the bar exam, I think you can um, handle questions along this line. Okay. Um, so we discussed section 86. Okay. Also important is section 87. So section 87 is about rescue. Okay. So we talked about fire insurance. So let's say, for example, this is the house that was insured against fire, and inside this house there are furnitures. Okay. Now, assuming that there is this fire in the neighborhood, and of course, the tendency of the homeowner would be to rescue the furniture, right? So, siyempre, ganun ang tendency. The household would tend to rescue the furniture, and probably they will place it in an area, in a common area like the barangay hall or the church. Okay, what if in the course of the rescue, okay, those furnitures were damaged, okay, or the appliance were damaged, or yun, nasira, or nawala, or nanakaw in the course of the attempt to rescue against the fire? Is the loss, in this case, compensable? Answer, yes, right? And this is based on section 87 that provides that where the thing insured is rescued from a peril, right? And the peril is the fire that was insured against, okay? And in the course of the rescue, the thing is exposed to a loss that is not insured against. Then that particular loss should be compensated. Okay, the insurer is liable. Now, in Section 88, however, okay, Section 88 provides a situation wherein a particular peril is accepted. In other words, in the policy, so Section 88, in the policy, it specifically states that a particular peril is accepted. Otherwise, not payable. The insurer will not be liable in case of loss because of this particular peril. Okay, let's say, for example, the peril is theft. Okay, so this theft is particularly accepted. Okay, now remember the example. This house, okay, is exposed to fire, and because of this, the household decided to leave the house. Also, iniwan na nila yung mga furniture dun sa bahay na yon. Okay, because of course, siyempre, if you will be given a choice, anong isi-save mo? Buhay ba yung property? Siyempre, buhay ang isi-save. So that was the decision made by the household in this case. Okay, but fortunately, the fire did not reach the house. However, um, when they get back in the house, nakita nila nawala na lahat yung mga property. Okay, nanakaw na lahat. Is the loss compensable? Is the insurer liable in this case? The answer is no, and the answer is based on Section 88. Okay, so I hope we clear yung difference ng Section 87 when there is an attempt to rescue, okay, and the cause of the loss is not covered by the policy, but there was an attempt to rescue from the peril that was insured against, then that loss is compensable, or the insurer will be liable for that loss. Section 88 is different. Okay, so when there was no attempt to rescue and the loss was due to an accepted risk, Okay, so the insurer will not be liable. So I hope that's clear. Now we go now to a specific provision under fire insurance, and this is alteration. Okay, so usually there's a structure that is insured against fire, and this in the usual example mga household or homes, but kadalasang ini-insure syempre yung mga warehouse or mga factory or mga commercial establishments, assuming that this particular structure is used as a home. Okay, and this was insured. And in the policy, it was stated that the use or condition of the property should not be altered uh, without the consent of the insurer. Assuming that from being used as a house, it was transformed into, let's say, a commercial establishment. Okay? Or sabihin na natin a restaurant. Okay? Now, supposing that this is the situation, this particular structure was insured against fire, this was used as home, and later it was converted into a restaurant. In the policy, it was stated that alteration in the use or condition should be with the consent of the insurer. Okay? Now, in this particular case, in case of fire, and because of that fire, the property was damaged. Is the loss, is the insurer liable in this case? The answer is no, okay? Because of section 170. But very important, okay? Whenever you answer a question on this, it is important to note whether the change would increase, okay, increase the risk of fire. Siyempre, kaya kapag ganito yung example, right, from being used as a home, ginawang restaurant, definitely, right? Or I think as a generally speaking, mas mataas yung risk ng some property being used as in a commercial purpose than just being used as a dwelling. Okay, so that is section 70. So the elements in section 170 is there was fire insurance, okay, and then the policy states that a consent must be obtained first before the use or condition is changed, and no consent was obtained. And then the alteration increased the risk of fire. Then in this case, the insurer is not liable. What about, okay? What about in case there was this policy, okay? So there was this policy. And in the policy, of course, it will enumerate terms and conditions. Okay? Assuming that there was no such prohibition against alteration. Okay? So in other words, it was not mentioned in the policy that the insured is prohibited from altering the use or condition of the property without the so there was no prohibition at all. Okay, and the insurer or the insured altered the use from residential to commercial, and supposing that the fire occurred, okay, is the insurer liable for the loss? In this particular case, the insurer is liable for the loss, okay, because there was nothing mentioned. It was not mentioned in the policy that the alteration is prohibited. In other words, this is the application of the of section 172. Okay, so this is section 172 that says that when there is no violation in the policy, okay, and there was alteration even to the point of increasing the risk, okay, and that caused the loss. Okay, so let's say for example, yung bahay ginawang restaurant, nagluluto, and yung fire ensued, that particular loss is compensable, or the insurer should pay for the loss. Okay. Now, we mentioned about increasing the risk. Okay. So, let's go back for a bit. So, let's backtrack dun sa section 170. We mentioned here that in case there was in the policy, it was stated that alteration should not be made without the consent, and the alteration was nevertheless made, and it increased the risk of fire, then the insurer will not be liable in that particular case. Okay. However, okay, when the alteration does not increase the risk, then the insurer will still be liable, and that is based on section 171. Right, so this one. So here, alteration without the consent, the result is the insurer may rescind the contract, the loss may not be compensable, or the insurer may not be liable. Okay, exception is when the alteration does not increase the risk. So this is section 171. Okay, now we go now to measure of indemnity. So measure of indemnity, this is the concept that states how much is the insurer liable for the loss. Okay, now you need to distinguish if there is no valuation. Ano nga yung klase ng policy that has no valuation? It is called open policy. Okay. Now, if with valuation, so this is what we call a valued policy. Okay. Now, in case of an open policy, so how much is the insurer liable to the insured? Okay. Now, section 173. So this is section 173. If the policy is an open policy, the insured is entitled to an amount that will be necessary to replace. So amount necessary to replace the thing. Okay, the thing lost. Okay, so let's say for example, there is this house, okay, and this house is worth 5 million, okay, and because of the fire, one half of the property was lost, and the insured um, the insured would need 2.5 million to replace or to restore the house to its original value. So the insurer is liable for this amount. Okay. Now, what if the policy is valued. Okay? When the policy is valued based on section 173, the law says that in the absence of fraud, so there should be no fraud or no mistake. Okay? Dapat in good faith si insured. Okay? If the policy is a valued policy, let's say, for example, the policy states that this house is worth 5 million pesos, when in reality, it's only 4 million pesos. Okay, so that is a condition. But the policy states that this house is insured for 5 million pesos. Okay, Section 173 says that if this is the case, in the absence of fraud or mistake, the parties are bound, okay, by the evaluation, right? Just like in marine insurance, right? So this is the rule. Now, so what is the effect? Supposing, okay, supposing that this is the situation. We have here a house, and this house was insured for 5 million pesos, assuming that there was no fraud, there was no mistake. Okay, so in other words, good faith, good faith. The parties are in good faith. Okay, and but the reality is the house is worth 4 million only. Now, the fire ensued, and one half of the property was lost. Okay, how much is the uh, insured entitled to, or how much is the insurer liable to pay the insured? Okay, so the answer is 2.5 million pesos because the parties, including the insurer, are bound by the valuation. However, it cannot exceed the uh, the 4 million. Okay? Kasi nga, it's a contract of indemnity. Assuming that, in short, assuming that there was total damage, okay, and there was an investigation made by the adjuster, and it was really determined that the value of the house is indeed only 4 million, then the insurer is liable for only 4 million. Okay, so that is the rule there. All right. Next is section 175, and this is about the transfer of property. Okay. Now, the law says that the policy of fire insurance, okay, cannot be pledged. Okay, so this is about the policy of fire insurance. If you will look at the law, section 175, it cannot be pledged, hypothecated, or transferred to any person, firm, or property who acts as agent or otherwise representing the issuing company. Okay? So let's say, for example, A is the insured and X is the insurer. Okay? And there is this policy of fire insurance that was issued by X to the property of A. Now, the said policy of insurance cannot be transferred to the issuing company or to an agent. And let's say, for example, B is an agent of X insurance, then it cannot be made. And all transfer, all pledge, or hypothecation or transfer shall be void. Okay, based on section 175 as it may affect the creditors of the insured. Right? So that is fire insurance. Now let's proceed now to another kind of insurance, which is casualty insurance. Okay, so casualty insurance is based on section 176. It covers loss or liability that would arise from accidents or mishap. Okay, but let's say, for example, the said policy is already covered by a specific kind of insurance like fire or marine, then it is no longer within the scope of casualty insurance. So, in short, casualty insurance is a catch-all insurance, okay, that would cover, again, for loss or liability that would arise from accidents or mishap, but it excludes this specific kind of insurance. Okay, so the purpose of casualty insurance is to cover for loss resulting from accidents. Okay, so very important that the loss must be due to an accident and not intentional. So examples are employer's liability. Okay, so in a recent case, the Chartis case, so it mentioned this kind of insurance, professional indemnity insurance. Okay, so this is an insurance um, um, that would cover breach of duty or a wrongful professional act of an employee. Okay? So, kaya nga siya professional indemnity insurance. Say, for example, you employ several individuals and you run the risk of being exposed to risk because of their wrongful exercise of their professional duty, then you can actually get a professional indemnity insurance to cover for that loss. Fidelity insurance is a type of insurance wherein you are insuring fraudulent or dishonest acts committed by your employee. Okay? So, in other words, ang na damage dito is the employer itself. Employer itself in professional indemnity insurance, it was the client that was damaged, and the tendency of the client is to sue the employer, and this kind of insurance will at least cover that particular uh, or liability by the employer. Okay, so this is not like a fidelity insurance because the fraud or dishonest act was directed against the employer. Okay, now other kinds of casualty insurance would be a plate glass insurance. So plate glass insurance is an insurance for protection against breakage of large panels of glasses. Okay, so I think we are all familiar with malls, right? Sa mall, di ba, ang lalaki ng mga glass panel doon. And that can be covered by the so-called plate glass insurance. Motor vehicle, so accidents involving motor vehicle, but we have this specific comprehensive compulsory motor vehicle law, right? And also the third-party liability vehicle insurance. Okay, so later we will discuss this kind of insurance. Okay, burglary or theft. Okay, so I think we are all familiar with that. Personal accident. Okay, so it can be, again, this is something that is familiar. Health insurance is actually a casualty insurance as long as it is written by a non-life insurance company. Okay? So again, health insurance is a casualty insurance only when it is written by non-life insurance company, such that when it is yung life insurance company ang nag-issue nito at yung health is just packaged to life insurance, then it is not casualty insurance. Rather, it is life insurance, which we will discuss a little bit later. Okay? Again, the purpose is to cover loss as a result of an accident. Okay? Now, there are two major divisions of casualty insurance. It's liability insurance and indemnity insurance. Under um, liability insurance, so it covers the liability of the insured, okay, such that if the insured becomes liable, then at least he has the insurer to pay for that liability. Okay, so the liability of the insurer attaches. Okay, so the insurer uh, would become liable uh, as soon as the liability of the insured to third persons are established or is established. Okay, so again, the insured is liable to a third person, and because of this, the insurer becomes liable. This is liability insurance. Okay, now under indemnity insurance, okay, the liability of the insurer, okay, only attaches after the insured has paid its liability to the third person. Okay? So again, I think the difference is apparent. Liability insurance, as soon as the liability, all right, yung that instance wherein the insured becomes liable to the third party, then the insurer will become liable. In indemnity insurance, it must be first established and the insurer should pay the liability to the third person only then that the liability of the insurer attaches. Okay. Now, in relation to this, there is this no action clause. Okay, so this is a clause in the policy that provides that a suit must first be instituted and a final judgment must be obtained against the insured. So only then, okay, only then that the person uh, injured recover on the policy. Okay? So again, this is not the insured, but the person injured can recover on the policy. Okay? So to illustrate, let's say, for example, A is the insured, X is the insurer, okay? And A caused damage to B. If in case there is a no action clause, okay, B can only recover from X when there is a final judgment against the insured. Okay? So this is how a no action clause operates. Okay? But there is this case, okay? There is this case that says that this no action clause cannot prevail cannot prevail over the rules of court. Okay? That aims to avoid multiplicity of suits. Multiplicity of suits. Okay? Bakit nagkaroon ng multiplicity of suits dito? Because let's say, for example, the requirement is a suit must be filed by the insured before the person injured can recover from the policy. Almost always the insurer will not pay without being sued, so there is another suit. Okay, so this is suit number 1, this is suit number 2. Okay, under the rules of court, iniiwasan nito mga multiplicity of suit, and therefore, okay, the person injured may institute a case, okay, against the insured and the insurer. Okay? And they may be joined as defendants para isang kaso lang. Okay? Why? Because the right to a relief, okay, would come from the same transaction. Okay? So again, that's the lesson there. But then again, right, I hope you can still recall our discussion, yung first case that we discussed, that the liability of the insurer is based on culpa contractual, and this is the reason why the insurer's liability is not solidary. Okay, the liability of the insurer is only based on the extent of the contract. So kung ano nakalagay sa contract, kung ano yung up to that particular extent will the insurer be liable. Okay? Now, we again mentioned in casualty insurance, the loss must be due to something that is accidental. It must not be intentional. Okay? So, what's the difference? Okay? So, intentional is when the loss was intentional on the part of the person. Sinadya. Okay? So, it is really the intent. Okay? The intent is controlling. Okay? Talaga bang gusto niya masaktan? Talaga bang gusto niya nang mawala sa mundo? Right? Sinasadya niya ba ito? Then that is intentional. Accidental, however, is something that happens because of chance. Okay? Hindi sinasadya. But, okay, there are cases that provides that yung loss due to a fault, recklessness, okay, or negligence, this may still be considered as accidental. So, mga example dito ng mga textbook writer would be someone playing with a gun, okay? A loaded gun at that. So, accidentally pumutok yung barel at natamaan siya at namatay. Right? That is considered accidental and not intentional. Okay? So in short, when we say accidental, pwede rin namang with fault. okay, because of recklessness, because of negligence, right? But there was really no intention to harm yourself. Okay, nagkataon lang ha na nagkaroon ng loss, then that is still accidental. And what is the result? In case of that is adjudged to be accidental, then the insurer is still liable. Okay, so there are a lot of examples. Okay, and there are also questions previously in the bar exam along this line. Okay, so some of the illustrations would be, let's say, for example, death. Okay, death from a disease, and this disease was contracted. Um, let's say, for example, ang insurance is um, against accidental death, okay? And the person actually went to a place na, let's say, known for malaria, okay? So, nagpunta siya doon, he contracted malaria, and because of that, he died. The insurer denies the claim, claiming that it was his fault. Bakit siya pumunta doon sa place na yon? Then the insurer is still liable because of this. Another is when the person died due to a sunstroke. Okay? And the reason why na sunstroke siya is because ang hilig niyang maglaro outdoor. Okay? Sobrang init. So, because of that, he suffered yung dehydration, which led to his death. Okay? Tumaas yung blood pressure, and the insurer denied the claim because of the argument that it was his fault why he exposed himself to too much sun. Then that is not intentional, that is still accidental. There was one time that the example was sumakay sa roller coaster, right? Because of that, he died. Yeah, the person died or the injured died, and of course the same ruling, the insurer should be held liable in that case. Another is when during a town fiesta, okay, may palaro pa boxing, okay, so certain person volunteered to box without appropriate training, because of that, namatay. Okay, so the insurer denied the claim, claiming that it was intentional on his part, kundi siya sumali dun sa boxing game to which he was not trained, hindi siya dapat namatay. Again, the insurer is liable. Okay, so there are a lot of examples, and there are at least two instances when this was asked in the bar exam. One in 1995. Okay, so in 1995, there was this question in the bar exam about a person who was playing with his handgun. Okay, and he thought that he removed his magazine, pero hindi pala. So, in short, the person died, and the claim for uh, 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 yung claim sa insurance was denied based on the argument that the death was not accidental. And the Supreme Court said the suggested answer is that the insurer is liable. Okay, so those are the example illustrations. Okay, now let's go now to the next kind of insurance, which is surety ship. Okay, so surety ship, this was discussed, I'm sure, by your CB law professor, okay, under credit transaction. Usually, ang discussion dito is guarantee and suretyship. But suretyship is a kind of insurance when this is the main business and not merely an incidental to another occupation. Okay, so so this is suretyship is insurance when this is the main business and not merely incidental to other legitimate business activity of the surety. Okay? So ano ba tong surety na to? Let's say for example, there is this debtor or obligee, and there is this creditor. Okay? Or the obligor. Okay? Now, in order um, to secure the performance of the obligation of the debtor or the obligee, okay, there is a third party. We call it a surety, okay, that would guarantee that the debtor will perform its obligation, and this is done through a document, okay, called a surety bond. Okay, if this is the main business, the main occupation of the surety, then this is insurance. Okay, so that's surety. Okay, so but nevertheless, insurance and surety has certain differences. Okay, as kind of contract, insurance is a principal contract, okay, while surety is a mere accessory, right? In this given example, without the principal contract, this accessory contract will not exist. Now, bakit naman yung insurance is a principal contract? Because surety is just one kind of insurance, right? There are life insurance, marine insurance, fire insurance, all other this insurance. These are principal contract that can stand on its own. Liability, okay? In insurance, the liability of the insurer is fixed in the policy, while the surety's liability is solidary. Okay, solidary with that of the principal debtor. Now, reimbursement. Okay, supposing that loss occurred in insurance at the insurer will pay, syempre wala nang reimbursement yan. Unless of course there's a tortfessor, binayaran ni insurer yung insured, so pwede niyang habulin yung tortfessor na yan. Okay, but let's say for example, A is the insured, X is the insurer, okay? So A suffered damage or liability, X paid A, the insured, then there will be no reimbursement na. But let's say, for example, in this given case, right, the debtor failed to comply with his obligation, therefore the surety will pay the creditor. The surety is entitled to get reimbursement from the debtor. So these are the three differences between insurance and a surety. Now, very important about premium. Diba? We mentioned always yung cash and carry basis. General rule, no payment of premium, no insurance. But then again, that's a general rule, no? I hope you can still recall the exceptions to this general rule. Now, surety is actually another exception. Okay? As long as the obligor, okay, as long as the obligor has received or accepted the surety bond, okay, then insurance exists. Ano ba ito? Para to clarify, diba? In ordinary insurance, there must be payment of premium first, right? Para magkaroon ng effective contract of insurance. Now, let's say, for example, this is the debtor, okay? This is the creditor, and the requirement of the creditor to the debtor is the debtor should put up a surety bond, okay? Which the debtor did by applying from the surety for the issuance of a surety bond. Okay? Now, supposing in reality, the debtor applied for a surety from this company at hindi pa nagbabayad si debtor. And the surety bond or the surety issued a surety bond and presented it to the creditor. Again, hindi pa nagbabayad si debtor. Okay? Kasi may bayad ito eh. Surety bond, may bayad yan. Assuming that the debtor did not pay yet, but the surety, for some reason, has issued the surety bond and presented it to the creditor. And the creditor accepted the surety bond. And assuming hindi nga nag-deliver si debtor. So ngayon, ini-enforce na ni creditor yung surety dito sa surety company. And the surety claims that this is not effective because of non-payment of premium. Is the surety correct in this case? Answer, surety is not correct. Okay? Because this is an exception to the cash and carry principle. Why? Because there was a showing that the creditor has accepted the surety bond. Right? So that's surety as an insurance. Okay? Now, another kind of insurance is life insurance. Okay, so syempre, life insurance is insurance on human lives. Okay, and it may be payable upon the death. Okay, so kaya nabanggit ko sa inyo minsan na parang misnomer ito. It's a life insurance, but actually the insurer will pay upon the death of the insured. But recent developments, I don't know how recent it is, but nowadays, very common na hindi lang siya insurance, may investment pa. Okay? So, this is, there are insurance na kapag na-outlive mo yung policy, let's say for example, payable in 7 years, but you are still alive after 10 years, then you get a certain amount, okay? And you can use that as your retirement program, or yes, retirement, for your retirement, okay? Such that there are two major categories of life insurance. First is protection. Protection ng mga beneficiary that in the event na namatay yung insured, then the beneficiary will be protected kasi makakakuha sila ng payment, usually lump payment. Okay? But like what we said earlier, marami na ngayon na may investment yung insurance such that the real intention is to grow the capital. Okay, so these are considered life insurance then. Okay, also there are individual life and group life. Okay, so individual life, this is when you get an insurance policy and you are the policy holder, okay, you insure yourself para sa benefit ng mga beneficiary mo, right? Group life insurance is when, let's say, for example, there is an employer, okay? Employer who would like to cover the all his employees, all employees with an insurance coverage. In our school, in our university, merong student insurance. So this is an example of a group insurance, right? Student insurance is when all students are covered by insurance, right? So while lahat sila covered by insurance, it is the university that holds the policy. Okay, so this is a blanket policy for all students. Okay, so this is just an example, but ang usual nito would be mga employer na mababait na pinapakover nila ng insurance yung kanilang mga empleyado for their protection. Right? Now, industrial life naman. Okay? So industrial life, this is a form of life insurance na ang payment ng premium ay either monthly or oftener, okay? Mas madalas sa monthly. The phase of the insurance is not more than 500 times the current statutory minimum wage in Manila. Okay, so 500. Dapat hindi lalampas sa 500 times of the statutory minimum wage. Minimum wage, okay? So that is what they call an industrial life policy. Okay? Now, is there a difference between the insured and the policy owner? Okay? Well, magkaiba actually yan, right? So the insured is the person whose life was insured, but it is the policy owner, however, is the one who procured the insurance. Okay? So pwedeng parehas na tao, pero pwedeng magkaibang tao. Let's say, for example, A insured himself. So he himself bought the insurance policy, right? So in this case, A is both the insured and the policy owner. But what if, let's say, for example, A procured an insurance over the life of B, naming himself as the beneficiary. So anong nangyari dito? B is the insured, A is the policy holder. Okay? Now, what is this AD&D? This is accidental health and dismemberment insurance. Okay, so this is an insurance that would cover accidental death, okay, and it also includes dismemberment. Okay, so nawala yung isang limb, nawala yung isang eye, so kasama yon, right? So this is AD&D. So what about suicide? Okay, supposing that there's this life insurance and the insured committed suicide. Okay? Is this, di ba, iba yung casualty insurance, ha? Now, in this case, life insurance ang kinuha. is the insurer liable to pay in case of suicide? Now, to answer this question, let's look at section 183. Right? Very important yung 2-year period. Okay? Because when the suicide happens after the 2-year period, then the insurer is liable. Okay? So, suicide before the 2-year period, then the insurer is not liable. Is there an exception here? Yes, there's an exception when the suicide was committed in the state of insanity. Okay, so nagpakamatay, medyo wala na sa katinuan, then that is compensable regardless whether the suicide happened within the 2-year period. Okay, but after the 2-year period, then suicide is compensable already. What about death? Death at the hands of the law. Yung mga legally execution. Assuming nagkaroon ulit tayo ng death penalty and the person to be executed is insured. Is the death compensable? Okay? Answer, yes, it can be compensable in the absence of a policy exception. So in other words, the policy may accept that. No? Pwede mag-provide yung policy na o hindi kasama yan, right? But without such exception, the death at the hands of the law is compensable still. Now, what about death? Death of the insured because of he or she was killed by the beneficiary, right? It is the beneficiary that caused the death of that insured. Okay, so we discussed this under section 12, right? I hope you can still recall, including the case. Okay, so in case the insured was killed, right? It was the beneficiary who is the principal, accomplice, or accessory in the death of the insured, then the share of that beneficiary will be forfeited. Okay? Ang question, kanino mapupunta yung share niya? This particular share, kanino mapupunta? It will depend if there are other beneficiaries. If there are other beneficiaries, then the share will be given to the other beneficiary. If there are no other beneficiary, then the share will now go to the estate. Previously, the law says it will go to the next of kin, but based on the amendment of the insurance code, it will be given to the estate. Are there exceptions here? Yes, there are exceptions. What if hindi naman sinasadya, right? The beneficiary, the killing was accidental in nature or it was in self-defense. Okay? Or the beneficiary was in the state of insanity or hindi naman talaga sinasadya kundi negligence. Remember, dapat willful killing ang elemento. Okay? So these are the exception. Now, is conviction necessary? Answer, yes, conviction is necessary. Okay? For the insurers, for the beneficiary share to be forfeited. All right? So that's life insurance. Now, the next insurance is micro insurance. So, micro insurance, this is actually a new kind of insurance introduced by Republic Act 10607, okay? Yung sinasabi nating law that amended the insurance code. Microinsurance, this is section 187 to 188. Okay, so this is actually an insurance intended for the poor, for the is protection din, magkaroon din ng insurance coverage yung mga may hirap. Okay, now there is a limit. There's a limit as to the premium. The premium should not exceed 7.5% of the current daily minimum wage for non-agricultural workers in Metro Manila. Okay. Now, what about the benefit? How much can they claim? It should be not more than, again, not more than, here, not more than 1,000 times of the current daily minimum wage of wage rate for non-agricultural workers in Metro Manila. Right? Now, Section 188 is, I think, is also important. Okay? Because this particular section says that hindi ka pwedeng mag-engage sa micro-insurance unless all the requirements are present. In other words, hindi porke, again, let's say, mayaman ka, so kaya mong ibigay ito, mag-insurance ka agad-agad, no, hindi pa rin pwede. Right? So, if you intend to go into this kind of micro-insurance, you need to comply with all the rules, regulations governing micro-insurance, which the Insurance Commission will prescribe. Right, and now comes the final kind of insurance, which is the compulsory motor vehicle liability insurance. This is section 386 to 402. Okay, so what is unique in this kind of insurance is this is the only insurance that is compulsory in nature. Remember, compulsory in nature. Remember, contract is insurance is a contract, so dapat may consent. Okay, but there is this specific insurance. But of course, don't get me wrong. There are other compulsory insurance. Yung SSS, GSIS, right? Those are forms of insurance na no choice tayo. If you are employed in the government, then you are with the GSIS. If you're from the private sector, you are with the SSS, right? But under the civil code, under the insurance code, this is the compulsory, and the only compulsory insurance under the insurance code. Okay. Now, what is this compulsory motor vehicle liability insurance? So this is a kind of insurance to indemnify. Ang purpose nito is to indemnify for the death, bodily injury, or damage to property of a third party or a passenger arising from the use of the motor vehicle. So iba ito dun sa comprehensive insurance na kinukuha natin sa mga kotse natin, right? Ang purpose naman nun, pag nawala yung kotse, right? Na-carnap yung kotse, we will be paid, compensated, or if na-damage yung kotse, then we can be compensated, right? But that is not compulsory. What is compulsory is this one, right? To get insurance every time we register our car, we get this compulsory kind of insurance in order for to provide indemnity to third party or to the passenger, right? In case of death or injury or damage arising from the use of the motor vehicle. Okay, so So we are talking about the insurer here. What is the nature of the liability of the insurer? The liability of the insurer is direct and primary. Ha? So in short, hindi na kailangan mag-antay nung third party or passenger na maging guilty or mahatulang guilty si driver bago maging liable si insurer. Okay? Because the purpose of this kind of insurance is to give immediate purpose, is to give immediate financial assistance to the victims. Okay? And this is based on the ruling of the Supreme Court in Schaffer versus Judge RTC Olongapo. So this is a 1988 case. Okay? And that's the purpose of the comprehensive motor vehicle law. Now, third party liability or yung PPL. Okay? So this is a kind of insurance, okay? Third party liability intended to provide the same compensation for the death or bodily injury of third parties, or kapag yung passenger ay third party din ng driver, then at PPL may also be may cover for their injury or even death. Okay? Now, kailan magiging liable si insurer dito? The insurer's liability accrues immediately. Okay? So, accrues immediately upon the occurrence of the event that led to the death or injury of the third person. Okay? Now, sino ba ang claimant? A claimant must be the victim or the victims. Okay? Which again, obviously should be a third party. Okay? Now, under the motor vehicle liability, there are known clauses. Okay? First, I think naririnig natin ito, yung authorized driver clause. Okay? Pag naririnig natin itong mga clause na to, ito yung part ng policy. Okay? Pag nakita natin yan ng authorized driver clause, what is this? No? What is this clause? How is this clause? How does this clause operate? Okay? This clause will operate to relieve the insurer from liability in case the motor vehicle is driven not by the driver nor his authorized driver, who must be duly licensed to drive. Okay? Again, dapat yung nagmamaneho ng kotse is the insured, okay? Kung sino man yung kumuha ng insurance, or someone who was authorized by the insured, and this must be duly licensed. Okay? Now, supposing that the data na because this is related to the next clause, yung theft clause. Okay? Ano naman tong theft clause na to? Right? This clause will make the insurer liable in case theft, yung carnap, is one of the risk insured. Okay? So kung merong theft clause dito sa insurance policy na to, in case na nawala yung kotse dahil na-carnap, then the insurer will not be liable. Now, in relation to the authorized driver clause, supposing that A is the insured, okay? A is the insured, okay? And supposing that the insured has no license. Okay, nag-expire yung license ni insured. Okay? And then the car or the vehicle was stolen. Okay? Now, supposing that if this is the case, okay, and the insurer denied the claim on the ground of violation of the authorized driver clause. Is the insurer liable in this case? Answer, yes, the insurer is liable in this case because what will prevail is the theft clause. Okay? Now, supposing, okay, another example. Supposing that there was no theft clause, and let's say, for example, the insured is A, but the vehicle was driven by B, who is not licensed, but A authorized B to drive the vehicle. Is the insurer liable in case of damage brought about by the negligence of B in driving the vehicle? Answer, no, right? Because the because of the violation of the authorized driver. But let's say, for example, okay, B has no license, okay, and the car was stolen, and there was this theft clause. Is the insurer liable to pay? Answer, yes, the insurer is liable to pay. Okay. All right. Supposing, okay, another instance is when, let's say, for example, A is the insured, and he operated the vehicle without a valid license. Assuming that damage to the car occurred, or let's say, for example, injury to another person happened, okay, and the insurer denied the claim on the ground that A has no valid license. Is the insurer liable to pay here? Answer, yes, the insurer is liable, right? Because the driver was the insured himself, hence always an authorized driver. This is the case of Palermo versus Pyramid Insurance. All right, so those are the relevant discussion under the comprehensive motor vehicle liability insurance. Okay, so I hope you have learned something from this discussion.